Hi, this is Community Conversations. Welcome. I'm Tina Howard, and today I have some exciting guests with me that are going to teach us a lot about money and home buying. And today we have Jeanette Cleveland and Susan Corley from Homestar Financial. They're the Homestar Corley team. So welcome, Jeanette and Susan. I'm so excited that y'all are here. We have so much to learn about the home buying and the mortgage business, and I know you guys are the ones to teach us all we need to know. So I'm going to start with Jeanette. So Jeanette, tell us about, I think everybody knows you. If there's anybody in Hartwell that should be mayor, it's probably you.
No, not me.
So you grew up here, right?
Yes, I've been here all my life, Hartwell native.
You have a grown son named Mason,
yes,
who went to school with my kids, and he is fantastic.
Yes.
And then you've been, I know, in the mortgage business for a while.
Yes. I think I started in the mortgage business when he was 5.
Oh, wow. Okay.
Yeah.
And then what is he now, 20?
He's 20.
So you've been doing this 15 years.
Yes.
That's a long time. Now, you were at Northeast Georgia Bank before Homestar, but still in the mortgage lending department.
Yes.
And so were you good at math as a kid? I mean, what was your impetus to be in the mortgage business?
Really, my first job was at Northeast Georgia Bank, and I just I was fortunate enough to have opportunities of advancement.
Oh, good.
And I went from being a teller to a drive-through teller to an assistant head teller to a head teller to the loan department, and I loved loans, so eventually was offered the opportunity to do mortgage loans.
It's your people skills that make you good at that. You may be good at numbers, but you got good people skills too.
I love working with the public.
Yeah, you and I worked together. I met Jeanette at the Chamber of Commerce. We were both on the chamber board and had so much fun those few years. So that's fun.
Was.
Well, I'm glad you're here. And Susan Corley. Susan, I don't know much about you, to be honest.
I am not from Hartwell.
Okay.
I grew up in Gwinnett County in Suwannee, and I have been servicing Hartwell with mortgage lending for 18 years.
Wow.
Although we did not have a full-time office here, 6 years ago we opened a full-time branch downtown Hartwell.
That's great. And you were in Gwinnett County, but you were servicing the area from Gwinnett then?
From Athens.
From Athens,
yes.
okay.
I live in Athens now, and I've always driven back and forth and serviced Hartwell from there. So
you've known about Hart County for a long time.
18 years,
18
and Hartwell
years.
has been very good to me in the mortgage lending business, and so we needed a full-time office here, so we opened that 6 years ago.
Good, good. And is that when you joined, Jeanette? 6 years ago, shortly around that time probably?
About 2 years later.
Yes.
You guys are veterans in this business. And Susan, you're a people person too, I know, and you're probably a math whiz as well.
People person is more me, and I think that's what brought me more so into this industry, was helping people.
Yeah.
And our company strives to, and our owner of our company talks with us a lot about changing people's lives.
Oh, absolutely.
And we feel like what we do does have an impact on people's lives. And
Huge.
in the midst of doing that, it also changes our own personal lives.
Yeah, yeah. You know, I have bought only a couple of homes, but you feel so vulnerable when you're buying a home because it's a big deal. It's such a big deal that I think a lot of people probably shy away from it thinking, I'll never be able to afford this, or I can't take that on, it's too scary. And so having somebody walk you through that process, I imagine, would be really helpful. So you're not lenders. The Homestar, we'll explain a little bit about Homestar, and maybe Susan, you can tell us a little bit. Homestar is not the lender, right?
We are the lender.
Oh, you are the lender.
We are a full service mortgage lender.
Okay.
And so we service our loans and we sell our loans.
Okay.
But we are a full service lender.
So you're not the middleman.
We're not the middleman.
Okay, I'm glad you explained that.
Yeah.
All right, so give me a little bit of information about Homestar.
We have a variety of programs to offer for residential home buyers, and we have specialty programs for the Hart County area. And
we're going to get into some of those in a little bit because before the show, Susan was talking about some of those, and I had no idea, and I called myself smart. So.
Our corporate office is in Gainesville. Homestar is a great company to work for as an employee, and they guide us, they give us the tools that we need to succeed and be able to provide all the products available to a residential home buyer.
That's great. And you guys are the dream team. Y'all work together, right?
We are a team. It takes all of us to make this process happen for everyone. And it's not just Jeanette and I. We have a processor, and we have a new loan officer that has started with us that will be in training. But it takes all of us from the beginning to the end to guide that buyer through the process and make it as easy as possible, because it's a difficult task, and it's mind-boggling to a lot of people.
It is.
And it's shocking, in a lot of ways to them. But if we can hold their hand and be there for them to answer their questions and explain what's happening. And the communication process is very, very important to have that communication with a buyer.
Again, your people skills coming into play.
Skills.
So what's the most important start, do you think, if somebody's thinking, well, my job is going really well and I'm married now, or I have a baby and I'm thinking of a home, what's the first important step that they need to take?
Getting pre-qualified.
Now, pre-qualified sounds like, is it a phone call or a meeting or what?
They can call us. They can schedule a face-to-face meeting with us.
Okay.
We can email them some information. I prefer the phone call or the person-to-person talk, because we can explain to them what to expect. We will provide them a list of items that we would need to look at. We ask for a lot of paperwork.
Yes.
Over and over again, and they're like, "You already asked me for that," and I said, "We're going to ask you over and over and over. We're going to ask you, why did you do this? Where did that come from?" So
and so it's not, and it can feel invasive if you don't know what to expect.
Very invasive.
So up front, the pre-qualification, that really should take place. Is that after you find a few houses you like? Or
no, you need to do that if you're even thinking about it or just wondering, can I buy? A lot of people can buy that are not aware that they can buy. And
that's a good point.
Yes.
We need to flesh that one out. I think a lot of people probably are qualified and don't know it.
They are, and now is a great time. Rent seems to be very high at this time.
Yes.
A lot of people have bought homes and can buy homes to where their mortgage payment is less than their monthly rent. They own their home; it's theirs, and they have a lot of pride in owning a home. So,
sure.
But yes, a lot of people can, and by doing the pre-qualification, it lets you know what you can buy, how much you can buy. If at this time it's not a good time, we can help you walk through the steps to prepare you.
So if I
later down the road,
medical bill or something like that, and my credit got dinged, you can say, okay, this is why your credit got dinged, and you need to take these steps.
We can do this, this, and this, and this is what you need to do. And surprisingly, we have a lot of people. I've had people that's come back to me 2 years later that came to me, and there was no way at that time, but 2 years later they said, we've done what you asked us to do, and that is very satisfying.
That's
and it makes you
great.
very happy to know that you helped them through that process and it worked for them.
So you're almost a counselor in a way of how to put yourself in a best position to do.
A lot of ways.
Now, can you give any examples of what kind of paperwork you would need for pre-qualification?
Yes, we typically will
will
ask you for 2 years tax returns and W-2s.
Tax returns, W-2s, okay.
We will ask you for 30 days pay stubs.
Okay.
And 60 days bank statements.
Okay.
And those will typically get us the highlighted areas of what we need to see. We will pull your credit.
That's not so much.
No,
right?
that will start a great pre-qualification
Okay.
if you can provide those, and we will also pull your credit. So we will
Okay.
we will look at your credit report with you and let you know if there's any concerns, or anything we need to change, or if we have any questions at that point.
Don't you think some people are like, I don't want her to pull my credit because maybe they
are. And we don't
they
judge
need
you.
to-
I
right.
mean, we're human. Everybody's human, and we've all made mistakes, but
Right.
we're there.
And it's going to come out. If you're in that home buying process and you didn't pay that,
We know everything.
It'll come out
we
eventually,
know.
so-
I mean, we have to get in people's divorces. We have to get into,
yeah.
and a lot of people probably don't want to share that information. But unfortunately, there's a lot of times we have to say we need to take a look at your divorce papers, and we have to prove child support, and things like that. So
sure. But y'all are trained in confidentiality.
yes, very confident. Everything
That's
is
something
confidential.
I know that a lot of the financial institutions insist on. So nobody would need to worry about, anything.
We would not be sharing their information with anyone.
Right.
I myself will see everything. My team, which is Jeanette, and my processor, will see all your documentation. And sometimes we have maybe a family member that might help a home buyer, and so we don't even have to share their information with the home buyer. Say if a parent wanted to co-sign, so we can individually accept their documents, and the other buyer doesn't even have to know what they are or anything about it.
So I don't want my kid to know I've got this
Right.
fund set up over here.
Yes.
I'll let you know. And, okay, that makes sense. So total
very
confidentiality.
confidential. Yes.
Okay, good. And no judgment. You
No
can sit
judgment.
down
No
with people
judgment.
and say, here's where I think we can make this look better. And then some people probably look good and they don't even know it.
We hear people's life stories. And you can look at someone's credit report a lot of times, and you can tell when life has hit them really hard and when they've struggled just by looking at their credit report. And you can see their ups and downs, and you hear so many different stories and aspects of people's lives of why this happened to me, you know. And so it's not just coming in there signing a document. You're involved in these people's life. I mean, and for 60 to 90 days you are really involved. You know them.
Yeah. And you probably, for every loan you make, you probably have made a friend.
Yes.
Yeah.
Which is great. That's a great way to look at that. So pre-qualifying, very important.
Very, the most important thing you can do. And it doesn't mean you got to buy now, but you know what you can do.
So you don't have to just, you could be thinking about it. You don't
be
even
thinking
have to
about
think,
it.
I'm going to do it today. You just be a good exercise to go through.
If you go through the pre-qualification process, and when you are ready to buy, and you let your realtor know,
mic drop.
you let that realtor know, I have already been pre-qualified with Susan Corley at Homestar Financial. They know that we take a lot of time with these buyers to prep them. And we tell our realtors, we don't want you taking someone out looking at houses that hasn't been pre-qualified. And
Now,
you do
that's
not
a good
need to
point,
write
too.
a contract until you know they have been pre-qualified.
That's a good point,
So it's
too.
not just with us, it's saving that realtor a lot of time, it's saving that buyer a lot of time, and a lot of times, you know, they're hoping they might can buy a more expensive house, and maybe they can't. So you don't want to get their hopes up. So if you do this, you know what you can do.
So if your buyer says, I've got this seal of approval, I've talked to Jeanette or Susan, and then your realtor will feel a whole lot more comfortable and know a little bit more about what they should be showing,
Yes.
which would help shorten that process, I'm sure.
We
for the
encourage
realtor.
our realtor partners that we share relationships with to make sure they have that, and encourage their buyers, even if they get someone and they're thinking just about buying or wanting to go look at this house and that house, we encourage them, and they know, any realtor that has a relationship with us knows that we're going to do our best to make sure.
Now, I shouldn't say this, heaven forbid, because I'm in the real estate business too, but I'm on the commercial side. Do you have to have a realtor before they call you and say,
We encourage you to. I think you need the representation, and it helps you understand as a buyer, because the mortgage part is a totally different part than the buying part, the home buying part. Yes,
I agree
and they,
with you.
in my opinion, I think it's important
Yes.
that they have the representation and they understand. And I tell them, if they come to me and they don't have a realtor, I ask, can we refer you to someone? And so
to look out for them?
Yes,
Yeah.
to look out for them, because
That's
they need that representation.
How do you know when to buy in your life? I mean, is there when you've had a job for a couple of years, or if you're getting married, or is there a good time to ever look at your personal life, or do you gauge it solely by the market and be opportunistic?
I would
about
say
that?
more of a personal life. When you're comfortable and you know that you're ready for that responsibility, because it is a responsibility. And when you make that commitment to have a mortgage and a monthly mortgage payment, you need to know that you're serious about it. And one of the things, and we'll go back to the pre-qualification a little bit, it helps you understand what payment are you comfortable with. Am I comfortable? You know, rent is on the upper end now, and so a lot of people can buy a house and their payment be less or no more than the rent they're paying.
And that's a great point, because I think people think my rent's here, mortgage would be huge, and that's not necessarily the case. You
Not
could
now,
a lot
especially.
of times get more space than you had in your
Yes.
apartment. I have tried to talk to my kids about, one day owning a home. They got so scared by the Great Recession, and they saw a lot of people, their friends at schools, parents lost their homes, and it's just, I think it's kind of given a lot of the younger people a fear factor in purchasing.
You got to live somewhere.
You got to live
You got to live somewhere
every day.
Why not make it your home and make it yours?
And what I've told the kids is owning real estate and living in it, it almost always appreciates.
Right.
Except in the Great Recession. That was a huge exception, I think, over time. But in a few years after you've lived somewhere, and as you said, you have to live somewhere, you'll have a nice pot of equity in there.
A lot. If you look back on the past few years where there were a lot of foreclosures and a lot of people did lose their home, and you look back at people that bought the foreclosure homes, now they're really reaping that benefit of the equity.
We bought a little house on Benson Street just as an investment and sold it at a loss in the recession just because we didn't want to keep up the payments, so we sold it, took a loss on it. But that house now is worth more than double what we bought it for, not even 10 years ago.
We have a lot of people that are coming back now that have bought the past few years in that situation and saying, okay, I'm comfortable now. I can take a step up. And this allowed me to take a little bit higher step by buying
and you can take that equity in your first home and use it towards
it just helps you upgrade. It helps you take a step up. So as you progress in your own personal life and goals, it allows you to do that.
Or you can stay and pay off your mortgage and have a rent-free. I always think it's important by the time you get to a certain age, whatever that age is, maybe retirement, that you don't have as much debt, right?
You don't.
Yeah,
There'll come a time when you get our age that you're more content. With things.
You have.
Yes, and you don't want to keep going.
Is there anybody that should not buy a home? Is it somebody that moves around a lot, or?
We do see that sometimes. Jeanette,
have you ever just said to them?
Sometimes we do. Sometimes we do, because it's a struggle for them to get through the process as far as like their down payments, reserves they need, and things like that. And it might be a lower income type of person that they really just need to get a little more control of their finances, of their debt ratios, to where they're not going to struggle and they don't put themselves in jeopardy of losing their home. But we do see that, and we are upfront with them, and we will tell them, I think you need to wait 6 months. I think you need to wait a year, and that does happen, yes.
And I'm sure that helps them, because at some point
you don't want to see someone work so hard to get to this point that they can buy, to lose their home.
Exactly.
And so if you can educate them about it and help them understand it better, then I think there's a better chance for them.
Let's talk about some of the loan programs. Now, this is not specific to Homestar. This is loan programs that may be national programs, maybe. And you were mentioning some of these to me before the show, and I was blown away. So what are some of your favorite programs?
One of my most favorite programs that we offer here for Hart County especially, and the surrounding counties, Franklin, Stevens, Elbert, Madison, all those counties qualify. We have a 100% program where they do not have to have a down payment. 100%.
So you wouldn't need a down payment. So you could get 100% financing on a house.
Yes. And the interest rates are really good. The mortgage insurance, the monthly mortgage insurance is really low. It's a great program. It is income limited, but for Hart County, a family of 4 can make up to $82,700 a year and get this 100% loan. So
it is income limited, meaning you can't be, a bazillionaire and get this. But a family of 4 can make up to $82,700 a year. That seems
that
like
limit
quite a
just
lot to
increased,
me.
And that really opened up for a lot more buyers, especially the Hart County area.
A family of 4.
Okay. Now, a family of 5 can go all the way to $109,000 and qualify for the 100% loan.
109. So if you make anything up to $109,000 and you're a family of 5, you can qualify for that USDA.
And it has one of the lowest credit score requirements of any of the programs also.
So if you have a ding or 2 on your credit history, you still might be okay on it.
Yes. You just need to talk with us. You just need to let us look at your credit with you and your income, and we'll let you know immediately if we think this
So
is
you'll
possible.
know pretty quickly if somebody would qualify for USDA.
It's a great program, first-time home buyer, for anybody, not just first-time home buyers, but exclusive. It's really great for first-time home buyer people.
So the US, I know what that is. What is the DA?
Yeah, it's rural development, and
Oh, okay.
it's guaranteed. Rural development guarantees the lender, if a buyer defaulted on this loan, that they would be paid their funds.
So the lender would be really likely to want to work with that
Yes.
because they're guaranteed by the federal
And it's
program.
specifically for your rural areas, like Athens-Clarke County does not qualify for
Okay.
it. Parts of Oconee County does not. But all your rural areas, it's really made for your rural areas, and it's
So a lot
great
of Northeast
program.
Georgia,
Yes.
and these Franklin, you named Franklin,
Franklin, Stevens, Hart, Elbert, Madison, all of those counties, Barrow, Jackson.
Fantastic.
Jackson, as large as it is, even qualifies for
Wow,
this.
that's a great program.
It's a wonderful program, and it offers a lot of opportunity for buyers to have a home.
Sure, because if you don't have a huge pot of savings for a down payment, you could still buy a house.
And that's not the only
great.
program that we offer. Every program available, conventional, FHA, VA, all that is offered through Homestar Financial.
Okay, so
and
you
when we
work with all the
pre-qualify
biggies.
you, we'll help you decide which is the best program for me. There's various reasons from one buyer to another. Every buyer that comes in and talks with us, they're treated individually because they are individual. Each aspect of that borrower will put them in a category, and we'll help them decide, where do I need to be? What are my goals for the next 5 years or 10 years? That's a question I ask a lot of them. That helps me determine what program do I want to place you in.
So, strategies, just to recap everything, we talked about having the importance of a pre-qualification, and it's simple to do that. You just
Call us,
and
come
say,
by,
I need to
make
get
an appointment.
pre-qualified. Okay, so then you can say, okay, we'll get these documents ready. Okay, and then they get those documents ready and they come in, and then you can say, based on these, and we'll run your credit, then you qualify for, and then you can take them through the amount, the type of loans, and all of that.
Yes, what their
And that's
payments
easy.
would be. You would be surprised at how many people come in and say, I want to buy this house at this price. And I will say, what kind of house payment do you think you want? And it's always $400 less than what that reality of that house they want.
Oh,
so
see?
we call it getting everyone in reality.
Yes, exactly.
We got to get real. We got to get you in reality.
Well, and you got to do it. Otherwise, you're just wasting your time.
Yes,
you're
because a
just
lot of
not
people,
gonna-
a lot of people will come in and say, "I want to buy this $325,000 house, and I want a $1,000 a month house payment." And
it doesn't work.
it doesn't work. So we help you determine that.
Do you think there is a housing shortage in Hart County now? I've
Yeah.
heard a lot about housing. So you agree that there
I
is a
agree.
housing
I
shortage?
agree. We have a lot of pre-qualified customers that cannot find housing at this time. So, of course, we're encouraging all of our builder friends, all our builder relationships. Could you please build? Could you please build one spec house? We probably have a buyer for you already. So,
Really?
yes.
Okay. That's good information for any builders out there that
Yes,
might want to build.
I spent last Thursday riding around with one of my builders, and he had bought 8 lots. And I said, "When we're going to get started? When are you going to have the first house done? Because I'm going to have you a buyer ready for you." So
there really is
there is really a
shortage.
need.
Because I know there's a shortage of rental property. I mean, rental property in Hartwell just is almost unheard of. You can hardly ever find a place to rent. So and it's hard to find things to buy, but I imagine there's some things out there, right?
There are things available, and we can put you in contact with people that can help you find the house that you're wanting. Sometimes there's special specifications that you need. So
What if you want to build a house?
We can help you through that process. We usually join with our local banks, such as we join with Nora Chambers with Synovus Bank in Livonia, and Brooks Page with Pinnacle Bank, and some of our buyers at Northeast Georgia Bank. So we try to have open relationships with all of our local banks too, because we need them and sometimes they need us, and our buyers need all of us. So
well, after somebody's been through a pre-qualification program, I imagine a lender, if it's not Homestar, would be thrilled to to work with somebody that's been through that
Yes.
process.
It's a lot different building than it is
it?
buying.
Okay.
It's a little more difficult. Got to have a little more monies and assets and reserves and things, but it can happen, and we can help. If someone tells me they want to build a house, I say, you got to come in and spend 2 hours with me. Because they have no idea what it entails.
And you can educate them
We
about
help them
the
with that.
building process.
We help
because
that with that.
I don't have any idea what that
We reach out to our local bank to help with the construction loans. We reach out to our builders to help them find out what size house, where they can be, and then I'm helping the builder say, okay, they can't go over this amount. This is what we can do. This is what they're comfortable with. So it takes all of us to do that.
And that just shows how involved you guys are in the community.
We
So,
love being involved in the community.
That's great.
We like to support Hartwell because Hartwell has supported us for a lot of years.
Yes, they have.
Good. That is great. See, that 30 minutes went by so fast, and I still have so many questions I could ask the two of you about the home buying process. So what's the best place to find you guys? Is it Facebook is the easiest way to find Homestar, or either of you? Or website, Google search? Or
Google search.
come downtown and look up?
Look up.
Yeah.
Drive downtown and see our sign.
Okay.
I'm there almost every day.
Jeanette's
Okay.
there usually every day from 8:30 to 5:30.
Okay.
I'm in and out. I'm traveling around everywhere to see, help try to generate new business.
Yeah.
And when we just also received our license for South Carolina, so we are now licensed to do mortgage loans in South Carolina.
Well, fantastic.
And
That's
so we're
great.
proud of that. So
Yeah, just across the river then.
we're trying to grow our team and grow. So we needed to
Good.
step out a little bit.
Well, we are so lucky to have professionals in Hart County like yourselves that can guide people through this huge process, because it's a big life changer.
It is a big life
And
changing
it can be one of the
process.
greatest things you ever do for yourself
It
in
can.
terms of your savings, your equity, your lifestyle, and everything. So
It's all about changing lives.
it is.
Yes.
Well, thank you so much for being here today. This was fun. Coming up next, we actually have Brooks Page from Pinnacle Bank. So he will give us some more banking tips and money tips. And again, thank you so much, Jeanette and Susan. This has been a really good experience.
Thank you for
Thank
having
you.
us.
Thank you.
The unique thing about HTC is the fact that we get to live in the community that we serve. Not only do we see you on a daily basis when you come in to add new services or to pay your bill, but we see you at the grocery store. We go to church with you. Our kids go to school with your kids. Our family is your family. And it's that dynamic that really provides a special opportunity for us to interface with you on a level that our competitors simply can't provide. We are your family and your friends, and we're committed to serving this great community.
Welcome back to Community Conversations. I'm Tina Howard, and this time I have Brooks Page here with me. Brooks is the Vice President and Loan Officer at the Pinnacle Bank here in Hartwell, which is great. And Brooks is going to be here telling us a little bit about some financing and banking and some do's and don'ts. It'll be really helpful. So welcome, Brooks.
Thank you, Tina. Glad to be here.
Thank you for coming on the show. I saw Wendy at the grocery store and said, please tell Brooks to come in and talk to us, because I think what I know that a lot of people know who know you is that you're a really smart person. And I think that having somebody who is smart in the field that you're in is really helpful, because a lot of us are not that smart in the banking and finance world. And so having somebody here locally that is kind of nice.
Well, thank you very much. I don't know about the smart part, but I'll give it a shot.
No, you are. So just starting off in general with banking and then moving into general finance, it's a little confusing. Sometimes people say, do you have a checking account and a savings account? Just a checking account? Because do you really need an extra account if you're disciplined about keeping your money in the checking account and keeping that amount aside?
Yeah, well, as you know, every situation is different. It depends on what you want to do in the long run. Savings accounts and checking accounts really, at this point in time, don't pay a whole lot of interest, as you know. But what I would do is use your everyday money that you need for everyday expenses and use that in a checking account, and anything you have extra you would want to put in a savings account and possibly build it up enough to put it in a CD, which pays a little bit more interest. Now, deposit accounts at banks right now are not paying a whole lot, but it is a very safe investment with the FDIC insurance. So usually the people want to do that. So yeah, having a savings account is good, and then building it up where you can get a CD and make a little more. And then there's other investment vehicles that banks have that they can offer. But the safest place, of course, you can put your money today is in a bank because of the insurance, the FDIC insurance.
Absolutely, absolutely. So stair-stepping here, we start with a checking account. None of those prepaid cards, right?
Prepaid cards are really a very expensive way to do. You just need to come in and do and just go to any bank and do a debit card.
I think that's what people don't realize about these prepaid cards,
Oh,
because
they're
they
very
are
expensive.
fee heavy, aren't they?
Oh yeah, absolutely.
And you'd just be better off coming into the bank and opening an account, because a lot of times if you have a certain amount in the bank, you don't have a fee every month. There's
That's
all
correct.
kinds of things you could do, right?
That's great. Most banks today offer free banking. Free. Now, if you get over certain limits in certain accounts, there are fees. But most of your banks, like our bank, we have most of our accounts are totally free. We do have, instances where we offer overdraft protection, and all banks do. But be careful with that, because that is really just money just wasted. Because
So overdraft fee. Okay, so if I understand overdraft protection, the way they kind of appear is that if I don't want to bounce a check, right? If I'm writing a check for my rent or my HeartCom bill or whatever, I don't want to bounce that check. So wouldn't it be a good idea if the bank gives me overdraft protection?
there's
Or
some
not always?
positives and negatives to
Okay.
it. When you go into the bank and open up a checking account, you have two choices. You can opt in for overdraft protection, or you can opt out. If you opt in, that means, for example, if you're at the grocery store and you're buying something for, say, just for an example, $10, and you only have $5 in your account, well, the bank will go ahead and pay that check, but they're going to put a fee on you, a $35 fee on there. So that is a very wasteful way to spend your money.
Yes.
So you can do that. It does help some certain people that are on budgets, but I would always opt out of that, because my theory is if you don't have the money, don't spend the money.
That's right.
Because it's such a waste of money. It's a big profit maker for banks.
I Googled that today.
Did you?
Do you know how much? Now, this is major banks. This is not Pinnacles and the regional banks, but the national banks made $6.5 billion last year in these fees.
Oh, yeah.
That's
Absolutely.
a lot of money.
And people, for some reason, don't seem to mind paying them, because banks are making a killing off overdraft fees.
Yeah.
And it's a main source of income for a lot of banks are these overdraft fees. And in my mind, I'm stuck looking at both sides of that coin.
Yeah.
It does help a customer, but then again, it hurts them, because we have some people drive the fees up over $100, $200 and just come in and pay it and just keep on going. So
I'll tell you what happened to one of my kids, and I won't say which one, but he did that. He had the overdraft protection, and he used his debit card. They covered it, charged him $35. He used his debit card again, because in his mind, he's like, hey, I still have money. And he racked up a couple $100 in these $35 fees because he just kept using the card.
No, yeah. My theory is if you don't have the money, don't spend it.
So today, electronic banking is big, and we all have these phones or computers. Is it a good idea to always check? How often should you be looking at your bank account?
Well, really, you should look at your bank account every day, because with the
Every day?
every day I would
How
look
do
at
you
it.
do that? On
Well,
the
you
computer?
just get online banking and look
Okay,
at it, and
okay.
if there's any unusual activities, you need to make a note of that, because people this day, they can get any information they want. It's rare, but these real intelligent people that can hack people's accounts, they can pretty much do anything.
And they don't even have to have your card or anything to do it. They just
Some of them
somehow-
can do anything. You have to understand when you pay for something with a debit card or a check, all your information's on there. So if they wanted to, they can get your bank routing number, which identifies a bank, and your account number, duplicate the check, write the check, get your debit card number, use get your information off that and go use it, or make another one and use it as a credit. There's countless ways people can do it. So checking it every day is good, and checking your credit every 6 months or so is a very good idea.
All right, we're going to get to checking your credit. Back to checking your bank account. What is the safest way to pay a bill now? Is it to mail a check? And if you mail a check, is it, I guess, best to put it in the post office box instead of your own mailbox?
That's one way to do it. A lot of people set up paying their bills on automatic draft,
Is
like
that
your power
safe?
bill. Yes, that's pretty safe.
So electronic, because in the few years back, people thought, oh, electronic banking, I don't want my information out there. But that may be a safer alternative.
It's a safer. Again, nothing's 100% safe. There is nothing 100% safe. But that is the safest, one of the safer way to do it. Safest way to do it. You can go in and check your account. What a lot of people get into is they'll order a lot of these things online, and what they don't do is they don't read some of the fine print, and they get reoccurring fees, membership fees, and when they sign up, they have a trial period. Well, these companies make a killing off you not canceling those, and they're going to debit your account every month until you cancel it.
See, that's scary.
Yeah, a lot of these health
clubs?
No, not health clubs, but a lot of these people that sell a lot of these supplements, that can do these great things. Well, they'll sell it to you just for the shipping and handling, but then in the fine print, they don't know you're going to get a bill every month for a new bottle, and they're going to go ahead and ship it until you cancel. Well, when you try to cancel that order, trying to cancel an order like that is very tough, because they got you set up and you've signed something. It's just in such fine print, you just don't realize it. So you got to be very careful of that.
Would you suggest if you buy anything reoccurring or online to use credit card, not a bank account?
Yeah, because credit card, you can stop either one of them by going to the bank or put, you just have to check it.
You just have to read the fine print.
But that's
So I'll tell you,
tough.
when I was a freshman in college, I was brand new out of the house, and in spite of my parents' warnings, I joined that Columbia Record and Tape Club. Do you remember that?
There you go.
Because I wanted some tapes.
I remember
and I thought,
those.
this is a good.
Yeah.
Boy, would I be in trouble today if it had allowed me to sign up online and it dinged my checking account every time.
I think they offered, $30 for $10, but then they'd send them
sounded
to you
so
every
good.
month. Oh, yeah.
And then they would send me one I didn't want.
Right.
And I wouldn't get it back in time because you couldn't. It was set up to fail. I didn't know that.
And they know people don't want to go through the hassle of going through the system and trying to return it. So these companies that you see not only on TV but on Facebook trying to sell these products, these supplemental products, be extremely careful of those, because they're going to get your information, send you one in the mail, and debit your account every month until you stop it. And sometimes stopping it is tough.
Yeah. So we were talking about loans. You can get a loan for anything these days. A sofa, a stereo set, of course a car. How do you know what to borrow money for and what not to borrow money for?
Well, usually you want to borrow money for things that are going to have some value in the future and going to increase in value.
So not a sofa.
Not a sofa. They're fun to have, not a sofa, not a stereo. These things you can have, but pay for those by cash.
Okay.
Or if you have to, use a credit card and pay it off in 30 days. But those kind of items, you really don't need to. You don't need to go get a loan on those.
You don't want to get a loan on a stereo or a sofa.
No.
So cars, though, those are big.
Cars, you got to have. Most people have to have a loan on a car.
Yeah.
Cars, houses, those type things. You have no choice, because most people don't have that kind of money.
Yeah.
But speaking of car loans, what you want to do is you want to shop the rate, as many banks, as many places as you can.
How do you do that?
Well, when you shop, I suggest people shop at least 3 different banks.
Okay.
And one of the things that they really need to do, and it's unfortunate you have to do this, but when you go like into a car dealer and you're shopping for a loan, you need to, first of all, don't give them your personal information with your Social Security number, because a lot of them will check your credit with like 5 or 6 different dealerships.
Well, yeah, because they'll tell you standing there, just, let us run a check and we'll let you know.
Oh, they check it all right. They check 6 or 7 of them, and the more inquiries you have on your credit report, the lower your score will go.
Yeah, every time
and they won't tell you. Now, what they're trying to do when they do that is shop it out and get you the best interest rate, because a lot of them, receive something in return when they get the loan.
Okay.
They will try everything they can to get the loan, and most of them have the customer's best interest in heart. But when you go shopping for a car loan, a lot of them will offer you a higher rate at first to see if you'll buy it. What you need to do is tell them, talk to a few banks, get a little bit lower rates, and go and say, I can get it lower than this. And lo and behold, they can get their rate all of a sudden lower at a different place. So they kind of start higher where they can make a lot more profit. But if you let them know you can get it lower, you watch, and they'll keep on coming down and coming down. A lot of it has to do, too, with the demand of that particular car. So if they're having trouble selling that car, you're going to get a lower rate. If they sell them like hot cakes, you're not going to get a great rate on it.
So best to go to at least 3 banks.
3 banks when you're doing anything, when you're buying a car, when you're buying a house.
Okay.
Go to a bank that's going to sit there and talk to you and tell you all the advantages and disadvantages about the different ways you can get a loan.
Okay.
Rate is not the only thing you shop.
Oh.
Your larger banks typically not always, may have the lower rate. But what you want to do is you want to make sure that you're dealing with a bank that has the people in there with the experience to be flexible and to offer you different ways to do it that might be in your advantage. It depends on your situation.
Yeah, it might make sense, though, to do business with somebody local that maybe knows you and knows where your county and that kind of thing.
In a small town, people feel more comfortable dealing with people they know.
Right.
They may pay a little higher rate, but they like it because they can come in and talk to you.
Right.
And they feel comfortable with you. And as long as that rate's not outrageous, you want to deal with them.
It's amazing we get hung up on numbers like a 6.25% versus 6.5%. But when you do the math, and any computer now has the mortgage type calculator, you find out that quarter point really translates to a very small amount of money. So you don't want to get too hung up on.
No. Now you do when you get into large amounts of money.
Yeah, like a home loan or something.
Those can translate into a good bit of money at a 0.25% difference or a little bit of difference.
Yeah. But a car.
Yeah, but the main thing that I like to do at Pinnacle Bank is when somebody comes in, offer them all the different options, tell them the good and the bads, the positives and negatives about both of them, and tell them to just shop it with 3 banks. Sometimes they'll come back to me because they understand that I'm trying to look out for their best interest. But a lot of them will go to a bank that offers them a lower rate, and that's fine. My job is to tell them all their options so that when they leave, they know that what they can do. Your smaller banks typically are more flexible. Sometimes we don't have the best rate, but sometimes we do. But
it's pretty close.
Yeah. In larger markets, you won't see smaller banks doing as well. And the reason that is relationships between people in larger markets usually is not as great as it is in smaller markets because they're focused on one thing only, and that's I want the best rate. They don't care if they know Brooks. They don't care if they know Tina. That doesn't mean anything to them. But in a smaller market, like Pinnacle Bank has most of their offices are in smaller markets. It means something to go in to talk to somebody who can be flexible with their loans. They can look for ways to make things work and that kind of thing. And a smaller bank does have difficulties sometimes in a larger market where most of those people are focused on one thing. They don't care.
Transaction oriented.
Yeah, they want the lowest rate. They don't care who you are. They don't care anything. And that, I see their point too.
What are the loans that you do the most of?
I do the most commercial loans, which are business type loans. I do consumer loans. Business loans.
What's a business loan? If I am starting a business
No, it's a lot of different things. It's starting a business.
Okay.
It's buying a piece of equipment for your current business. It's looking for a line of credit if you need a line of credit for your business. Business loans, when a bank looks at a business loan, in fact, when a bank looks at just about any other loan, any type of loan, they look for one thing and one thing only, mainly, is their ability to repay. Because when it comes to a loan, the only thing that's going to pay that loan back is income or money. So banks look at that as their number one item when they make a decision.
So they look at money you've got coming in.
Yes, because the money is the only thing that pays a loan back.
Right. Well, that's right.
Of course, we look at other things. All banks do look at your credit, looks at your debt to income to see if you're able to pay the loan back, look at the collateral. Before '08 and the economy went down, banks were doing a lot of collateral lending. That means that...
I don't know what that means.
That means that, let's say you had a $100,000 lake lot.
Okay.
And you came in and you did not show enough income to support the loan.
I need a loan,
yeah.
And I come in and I say, okay, I've got this lake lot, and it's a $100,000 lake lot. Okay.
And back then, you could come in and I could say, well, she or he's giving me a $100,000 lake lot, and she's only wanting $10,000 or $15,000 on the loan. Well, you think to yourself, that's a no-brainer.
Right?
Let's just do that.
Yeah.
But think about it for a minute. Even if they have, that a loan amount, the only thing that's going to pay that loan back is money. And the only way we have to show in a loan file how that loan is going to be paid back is income on their tax returns or the pay stubs.
Okay.
So now...
So it's not enough to have a collateral piece.
No, bank regulations won't allow banks now to do those type loans. We have to prove... Yeah, because so many of those type loans were done, and if
failed.
if you can't show how a loan's going to paid back, and the loan goes bad,
Yeah. So they look at income. They want to see
they look at income.
Business income.
Oh, absolutely. W-2s.
Okay.
All your tax
Pay
returns,
stubs, tax returns. Okay.
business tax returns, pay stubs, anything. We have
credit score.
We look at your credit score. Look at your debt to income.
Okay.
We look on business loans. When they're larger loans, we look at what they call debt service coverage ratios. That's the ability of a business to pay the loan back.
Okay.
Do a lot of analysis on that. But
so it's got a lot of other loans out there. You look at that too. Credit scores are an important part of lending, and you said you should check your credit score every 6 months. You said that a while back. How do you do that?
Well, there's a lot of different ways you do it. You can't go into a bank and check it because banks require you to actually apply for the loan.
Okay.
And then we have to make a loan decision. We can't pull credit.
So if I want to check my own credit, do I go to, you see the freecreditreport.com and all those? Some of those cost money and some of those don't.
Yeah, I think, and you need to double check this, but freecreditreport.com, creditkarma.com, I think offers you a free.
Okay, so check before you go. Check. The point is, I guess, just make sure that it doesn't cost you, because you should be able to do it for free.
Yeah, don't give them your credit card number.
Don't give them your credit. Don't give them any numbers.
That's right.
Just there are things that you can. And I think Clark Howard or one of those consumer websites has a way to do that for free.
Yeah, and another thing related to that is a lot of times people will run their credit report through Credit Karma or freecreditreport.com, and they'll have one figure that their Equifax Beacon score is, and then they'll come in, we'll do it, and it's different. And I don't know why, I can't explain it, but of course we have to go by ours.
And one of the reasons you want to check your credit score is not just to get a number, but to see if there's anything on it that you didn't do.
Oh yeah, absolutely. A lot of people want to check their credit score because when you look at your credit, there may be somebody who's got your personal information, went and opened up a checking account, a credit card or whatever in your name, and they may be running it up, and then you got to dispute it and go through all the red tape. So check your credit, and at least 6 months.
Every 6 months.
Yeah, really do that. And just look through it and make sure everything's yours.
That's good. Well, you told us a little bit about what banks look at when you come in. What does a consumer look at when I'm trying to get a loan? I look at interest rate, but what else do I look at? Relationships and anything else?
What you want to do, if it's a really, really large loan, you want to shop 3 banks, and if it's a large loan, especially a house loan or a big loan, you really want to shop the rate.
Okay.
Now, you also really want to shop a banker that's going to try to put forth the effort to show you different ways to do a loan. For example, you may be wanting a big loan to buy a house, and you're looking at, I think, rates. Rates vary every day, but I think they're in the 4s now.
Okay.
Well,
and that's good, right?
Yeah, there's other ways to do those loans. And people don't think about this a lot of times, but banks do loans on CDs. For example, if you have a savings account and money in the bank that you want to keep in a nest egg, you can actually secure the loan with that instead of the house, and you avoid not only a ton of closing costs, appraisal fees, attorney's fees, etc., but you get a very low rate because the bank, when we do a loan against a CD, a certificate of deposit, which is a savings account, there's no risk to the bank, so we end up doing that loan for like 2% above what we're paying you.
So that's good to know. So you can park your money in a CD or some kind of vehicle like that, and then borrow against that for your home. That way it's not the home as collateral, it's the CD.
Yep. Now, the only disadvantage to that, it does tie your money up, but it offers you a low rate.
A lower rate.
And the other thing is, people don't realize sometimes, is that when that loan's paid off, in the end, you have two things. You have the money still in the bank. Once the loan's paid off, the bank releases its hold on your money, and the house is paid for. So you got a paid-for house, and you got $100,000 still in the bank.
That's great. And good information.
Oh, yeah.
Good information. So banks have kind of gotten a little bit of a bad rap, I guess, with the news about Wells Fargo and setting up the accounts and everything. Is that widespread, or is that something we need to worry about?
No, you don't really need to put a lot of worry on that. Your larger banks tend, and it's all the way the management's set up, these people on the front line, these tellers, when you have a larger bank, you have to have some way to have some kind of accountability to their performance. Wells Fargo went to the extreme in their cases because they put extreme goals or quotas, some people call them, on their employees. And when you do that, it puts a lot of pressure on frontline employees. And this is something that really cost Wells Fargo a lot of money. And the reason is they had so much pressure on them that they knew that if they didn't meet their goals, that their job's on the line. So what happens is in that case, you had a lot of employees that just made up these bonus accounts to meet their goals. They had to have a job. You know, there's two sides to every story. You look at their side of it, where they're under a lot of pressure to keep their jobs, and then they got middle management that's holding them accountable. They got a lot of pressure on them, and usually those people in higher position at any banks, they have this kind of shield of protection around them because of their titles, and they can kind of do things that are not always in the best interest of everybody. So they, you know, and these big salaries, some of them get. So they want to keep things going. There's a lot of pressure to perform. So they, for example, Wells Fargo, to solve that, they just put out advertisement said that the frontline people no longer have goals. Now, there probably is a spin to that. I don't know what it is, but you know, look on the bank owner's side though. You know, if you want to, if you own a bank, you do want your people to have goals and try to accomplish the goals.
Well, most salespeople have goals. Most people in the sales.
But when you're dealing with sales, you really don't need to. A lot of people, when they deal with sales, you don't really tie that in with people's money. When you're talking about people's money and sales, that's kind of a conflict of interest in a way.
Yeah. So you're supposed to be helping people protect their money, right?
Yeah. Oh, absolutely.
As a banker. Yeah.
And if you feel that banker's trying to sell you something, doesn't have you in the best interest, best thing for you to do is not do it.
How easy is it to switch banks? Is it?
It can be very easy and simple. It can be very difficult.
Depending on automated payments?
Yes. It's dependent. A lot of people are not going to ever switch because they have their bills coming out of their account.
Yeah, you got to call all these people
and it's just a hassle. And it's really not a hassle. We can show you how to do it. It's really not that bad. In people's minds, it usually is. That's why one of the main things banks do is when you open up accounts, try to get you as many accounts in there, as many services as they possibly can. Yeah, your frontline people are trained to cross-sell you as many products as they can. And that's what they're trained to do. And you have to be careful with that. Now, let me tell you about a bank that I read about 10 or 15 years ago that I really think had the solution, not only in the banking world, but all businesses. You know, you got to be accountable and you got to have some kind of scorecard. But this bank was really, really, you know, on top of things, and they really did great. And what they did, instead of putting sales pressure and goals on their frontline employees, they really looked at their employees and said, graded them or whatever I'm graded them or whatever on what products and services they offer to the customer. So they would put together a plan where, you know, they would look at like tellers or personal bankers and how many accounts did you offer this month?
Oh, instead of how many you closed, it's how many you offered.
Yes. Now, when you do that takes a lot of pressure off the front. That they feel more natural. They can do their job a lot better because they don't feel
so compelled to
Yes,
to
when
get
you
the
have
deal.
that pressure on you, it not only makes your life miserable.
Yeah, it
especially
does.
these bigger banks.
Yeah, I imagine
it
that's
makes your life miserable. So that bank did extremely well, and it grew just, you wouldn't believe how big that bank grew because the employees were relaxed.
Yeah, they felt good about what they were
The
doing.
management made sure everybody was respectful in all their communications, and everything was done in a professional manner. The employees felt good about going to that bank and working.
Sure.
And when you feel good and you have a good environment,
Absolutely.
you get the best employees.
Agreed.
So what they did was they created an environment that attracted the best people. But the key with them, which they didn't have to do the sales quotas and that was change it to offers.
Yeah.
So if they
Makes sense.
if they made say 50 offers,
And
well,
that
that counts on their scorecard.
Yeah.
And
absolutely.
then that puts them at ease.
Yeah.
And it doesn't make you try to sell a product to a customer that really don't
that
need
doesn't
it.
need it. Exactly
And
right.
that bank, I think that bank tripled in size and within 5 years. And
See
I
the
think
results.
and I think they sold and the owners made a ton of money because they took that approach.
That's good. That's
But
smart.
most banks usually don't do that because most banks want to copy each other's.
Yeah.
So, and so you
Lot
get
of-
the same thing.
Even outside the banks, people want to do
so
that.
yeah.
So tell me a little bit about, banking is like everything else, the evolution of technology.
Mm-hmm.
What's new at Pinnacle, for example?
Well, everybody's familiar with whatever bank's got to offer. You got online banking, you got
The apps.
you can transfer money. A lot of banks are going to just where you can go in the bank and go up to a platform like this, and you have somebody there, and he kind of shows you, or she kind of shows you what to do,
Okay.
and you can do a lot of your transactions there.
Okay.
And then a lot of banks are going to teller machines. We just got installed 3 new teller machines. We call them Penny. So when you can go up to them, what they offer for you is, the main thing is they're people, you go up to the machine and you can tap it and a person comes on that you can talk to. And they can do...
A video person or a...
you actually see a person.
Oh, so there is somebody video. Okay.
And the reason we want to do that is because it gives us extra hours. They're there to 7, and then they're open on Saturday. I don't have those hours with me, but
So if I'm working and I get off at 5, but the bank closes at 5 and I can't get there with my paycheck, I can come to the ATM and engage with the video?
you can, and they can do most anything a live teller can do. There are
Really?
certain restrictions, yeah. The minimum amount they can give out, I think, is $2,500.
They can give out that much? Well, of course you have to have it in the account, right? Darn,
Absolutely.
darn it.
We'll get you for $30 and make us an overdraft fee.
Right.
That's the easy money for the bank.
That's right.
But yeah, that technology is
Well, that's
there
nice.
now. Yeah.
And Saturdays, Sundays too?
They open on Saturday. I don't have the exact hours. I think it's 8 to 2, but
Okay.
don't quote me on that.
Okay. But that's nice because that will give somebody who
yeah.
can't get there during business hours
Yeah.
the opportunity
And
to
then on the other
transact.
side of that coin, sometimes people want to talk to people. So some people are not going to like it, which is fine. But I think over time, when they get used to it, they'll like it very much.
Right.
And it'll be a convenience for them, and they'll like it a whole lot. But the reason we're doing it is mainly, after 5, people can go. Saturdays they can go.
Right.
And it can do a lot of things, or most things, that an actual teller can do.
That's great. And if
again-
you want to come in and see eye to eye and sit down with somebody,
Yeah, you can
come
do
see
that.
you, right?
Yeah, come see me. Don't see any other banker in Hartwell, just me.
So Brooks Page, this has been fun and informative, and I appreciate you coming on.
Yeah, thank you.
I think this is a learning thing for all of us, and we're all learning to manage money and evolve as technology evolves. So very helpful.
Well, thank you very much for having me.
I appreciate
enjoyed it.
Yeah, good. All right, maybe you can come back and talk to us
I
again.
will.
Thank you. And thank you, Wes Bailey, our director, and thank you, Randy Daniel, and allowing us to come in here and do community conversations. We'll be back again next week. Thank you.